Okay, let's jump right into this explainer. We are looking at a massive financial siren that is making absolutely everyone in the tech world stop in their tracks and wonder, is our bet on AI getting a little too big? Welcome to a deep dive into the AI data center arms race. Today, we're going to look right past the software and focus on the sheer physical scale of this operation. I'm talking about enough concrete, steel, and silicone being poured into the earth right now to literally reshape our global power grid.
To really wrap our heads around what's happening, we have to look at the massive question driving this whole debate. AI data center spending is projected to cross the $1 trillion mark. Now, to put that into perspective, that reportedly surpasses the Manhattan Project, the Marshall Plan, the International Space Station, and the Apollo program combined. Sure, you could argue about inflation or public versus private spending, but beneath all that nitpicking is a much darker question. Are we watching the literal foundation of the next economy being poured, or are we just witnessing a very, very expensive pileup of hype, GPUs, and empty buildings?
You see, there's a brilliant, glaring difference between those historical moonshots and our current reality. The AI boom, it's not a single focused government project with one mission director and perfectly clear goals. Not at all. Instead, it is a frantic, wild stampede driven by thousands of corporate capital decisions, private vendors, and these massive hyperscale buildouts. It's a completely decentralized race to the top.
So who exactly is feeding this chaotic machine? Well, it's a massive collision of giants: Microsoft, Amazon, Google, Meta, and Oracle. And they are all fighting for space right next to hungry startups and sweating utility companies. Data centers, they're no longer just this quiet back-office infrastructure. They've actually become the physical, concrete expression of the tech world's absolutely biggest wager. And it's being built at what some insiders are describing as a wartime emotional speed, eating up power allocations that could literally run small nations.
Okay, let's look at Section 1, the skeptics' view, a brute force dead end. The skeptics have a really serious looming technical and economic anxiety here. Their core fear is that this current form of AI might just be a brute force dead end. See, this entire build-out assumes that scaling up, just adding more data centers, more chips, more power, is always going to yield smarter models. But what if it doesn't? If each new generation costs vastly more money but delivers way less obvious improvement, well, the economics become incredibly fragile. We might literally be building a $1 trillion monument to the wrong mathematical curve. And honestly, this skepticism isn't just some abstract high-level economic theory. Everyday working people are already feeling the downsides. I mean, think about it. Companies are spending billions on complex liquid cooling and bleeding-edge GPUs just so a user can search for a simple wiring diagram and get served dangerous generated junk. Critics are actually calling it AI slop. If this wildly expensive infrastructure just churns out content that pollutes our information ecosystem, the public is going to see the cost side very clearly. We're talking massive power bills and giant buildings that just result in worse search results.
But let's pivot to Section 2. The optimist view: the internet always expands.
The optimists? They're leaning hard on the data center industry's oldest, most reliable confidence trick. If you build it, they will come. And to be fair, history backs that up perfectly. Empty digital capacity rarely ever stays empty. Just look at the history of expanding compute. We went from the enterprise cloud right into streaming video, gaming and storage, scientific computing, and now AI inference. Every single decade, the experts tell us we finally have enough compute. And then the world turns right around and invents 10 new ways to consume it. So for the optimists, even if this current hype cools off, these buildings are still going to hold immense value.
But here's the catch, and it's a big one. We are walking a real knife edge between two vastly different types of infrastructure. General data centers, those are flexible. If one tech trend dies out, you just pivot. But specialized AI capacity is a totally different beast. We're talking high-density GPU halls and complex liquid cooling loops that are incredibly specific. And AI accelerators, they age in dog years. So if this hardware bet is wrong, those specialized configurations might not translate gracefully to other uses without some seriously ugly, incredibly expensive retrofits.
Moving on to Section 3, selling the AI shovels. Who gets paid now?
If you strip away all the deep philosophical debates about the future of human intelligence, what we are really in the middle of is a very classic, very familiar gold rush. And honestly, whether every single AI app ultimately pays off is almost secondary for the folks selling the shovels. The chip makers, the memory suppliers, the power equipment manufacturers, the cooling companies, the landowners, and the utilities, they are successfully invoicing the boom right now.
In every gold rush, the absolute surest money is in the picks and shovels. The AI supply chain is securing its bag today, regardless of what happens to those software companies down the line.
Now, this is absolutely crucial to understand. Capital expenditure does not automatically equal end-user value. That is easily the most dangerous misunderstanding in tech right now. That massive trillion-dollar spending total we talked about earlier, it just means the infrastructure supply chain is getting paid cold, hard cash today to build towards some expected value tomorrow. If consumer demand actually falls short, the vendors still book their massive revenue. It's the operators and investors who are left holding the bag, absorbing all that long-term risk.
So, what is keeping those investors and operators spending like crazy? Honestly, it's pure, unadulterated FOMO, the fear of missing out. The boom is entirely reflexive right now. Spending feeds confidence, and then that confidence just feeds more spending. Imagine being a CEO and sitting in a boardroom, terrified of having to explain to your shareholders that you completely missed out on the biggest infrastructure cycle in tech history. That sheer terror is what keeps the concrete pouring, even when some of these bets look highly, highly questionable.
Which brings us to Section 4, the looming shadow, the empty warehouse fear.
This is exactly where the glamour of those flashy tech keynotes crashes right into the harsh, unforgiving physical reality of construction. The darkest fear looming over the entire industry right now is that these massive facilities might not actually contribute to long-term growth. What if the expected workload just doesn't show up? These tech marvels could become nothing more than empty warehouses. We'd have massive buildings consuming vast amounts of land and power, completely transforming into literal monuments of very, very expensive optimism.
Because think about what could actually disrupt this massive infrastructure plan. What happens if AI demand suddenly shifts heavily from training these massive models to just simple inference? What if the models themselves become radically more efficient almost overnight and just need less hardware? What if the regulators step in, or customers simply refuse to pay the high pricing, or the public just gets entirely tired of all the AI junk? You can't just release a software patch for a million square feet of concrete. Any of these shifts could instantly turn specialized, state-of-the-art facilities into extremely awkward, stranded assets. Ultimately, trying to compare this to historical megaprojects like the Apollo program or the Marshall Plan, it's a massive stress test for the AI industry. See, those historical projects had defined destinations and incredibly clear missions. The AI data center boom relies on something far more dangerous. It relies on a fuzzy, deep-seated belief that just having enough compute will eventually unlock enough value to justify the absolutely staggering scale of the cost.
The AI build-out we are witnessing right now is both truly extraordinary and, frankly, entirely reckless. Yes, it is real infrastructure for a real shift in computing, but the table stakes have gotten terrifyingly high. And it leaves us with one incredibly monumental question to chew on. When the dust finally settles, will these massive GPU cathedrals be the engine rooms of a brand new global economy? Or will they just be the empty, rusting monuments of the most expensive hype cycle in human history?